Investors and traders, welcome to the channel. Market chart pattern. Today is 16th of January 2024. I hope everyone is having a great day. In this video, we are going to take a look at the key US stock indices, and we'll also take a overview of the different markets in the United States. As always, this video is for educational purposes only and is not a financial advice. So we'll start by taking a look at the bond markets. Just an overview. What we look at when we look at the bond markets, what we see is the bond markets were under pressure, and we have seen bond prices move lower, which means that yields have been moving higher. And the biggest loser was the 30-year long bond futures, which lost 1.6%, and it lost nearly about 2 points. That's quite a lot. For the bond futures, the long bond futures. We will go into the charts for the bonds as well, because we should take a look at the key pattern formations, and I will also show you the 2-year treasury note as well, and how the yield is moving for that. In my opinion, Fed really looks at the 2-year note and the yield, so that's why it's quite important to actually take a look at that. And the dollar index was firm today. It was up nearly a percentage point. Euro USD, of course, was lower as the dollar was higher. And the really interesting one is the USD JPY. The dollar keeps on getting really strong against the yen, or the yen is getting weaker, and we see over a percentage gain in the USD JPY. And the British pound, it was also lower, or the dollar was stronger against the British pound. The metals, gold lost $20 for the day. It was down by over a 1 percentage point. It's very interesting because last Friday the gold was up $20, and today it's down $20. So a lot of volatility in this market. Silver also lost 1.18%. It's actually slightly weaker than the gold in terms of price action. Taking a look at the energy, so crude oil WTI lost a little over 1%. Very interesting is natural gas lost 15% today. Natural gas has been moving up, down quite a lot. There's a lot of volatility in this market. We'll take a look at the chart for this one. Moving into the stock indices, what we see is that S&P 500 cash index lost nearly 18 points, or 0.37%, and the S&P 500 E-mini futures lost 12 and a quarter points. So actually the futures are actually or the cash is actually at a discount compared to the futures contract. Surprisingly, the NQs, they actually performed better than all of the key indices that we follow, and closed in the positive. And Dow Jones lost a little over 200 points, and the weakest one has been the small caps, Russell 2000. Once we will begin to take a look at the Treasury note futures charts, it makes sense that the yields are rising, or at least they rose today, and that could bring the small cap stocks under pressure. And this is why we see there is the Russell 2000 has actually been under pressure over the course of last week quite a lot. Okay, so let's take a look at the 10-year note. Here we go. So this is the 10-year note, and what we see is here, look at this day. It's been a big down day for the 10-year note, and this blue line is basically the market symmetry. We did discuss this one before as well, and when the market had a move to the upside, it went up by this much in magnitude, and then we can see a move to the downside started. In other words, yields began to rise, and what we see now is similar magnitude, and what we are seeing is this market moving lower, or beginning to move lower. Whether it will continue to do that, we'll have to wait and see, but this bearish symmetry is still there, and it's been a number of days that the market is moving sideways and sharply lower today. Long bond futures, This is the daily chart of the U.S. Treasury. This one is down nearly 2 points today. That's quite a lot for the long bond futures. Here, this one actually did go above its bearish symmetry. Here, okay, actually, I have not drawn it from this end to this end for this cycle, but it's nearly there as well, just like the 10-year Treasury note. And what it did is actually closed below the 61.8% Fibonacci retracement here. Looks like this wants to move lower. And now let's take a look at the US 2-year note. And here I'm going to use the yield chart. So this is the daily chart of the US government bonds 2-year in duration. So shorter term or shorter end of the curve. And here what we see is on the y-axis we see the yield, we don't see the price. And what we can see is that this one is yielding 4.22% as the close of business today. And there has been a nice move lower since last October, 19th October 2023. And now it's just gone right to the 61.8% Fibonacci retracement, and we have seen yields begin to rise. This is what we have seen in the long bond futures, which lost about 2 points, nearly about 2 points today. The 10-year Treasury note yields were higher. We are also seeing that for the 2-year, the yields actually went up today as well. And what it means is higher yields are likely to put a pressure on the stocks as well. So the stock indices could come under pressure, and this is what we have seen today. Some of the Dow Jones, for example, being down a little over 200 points today, and the Russell 2000 has been weaker. Okay, so what we're going to do is now move to the dollar. So this is the daily chart of dollar, and look at the strength that came into the dollar index today. It actually opened with a gap and just kept on moving higher. And what it has done is it has broken out of this channel, and it has also closed above the 38.2% Fibonacci retracement and the 61.8% Fibonacci retracement of this swing, and 38.2 of this swing, and looks like now it wants to go and tackle the 104 point. What it would mean is the currencies, the Euro USD, GBP, cable, they are likely to come under pressure, and also the metals could also come under pressure, and a stronger dollar could have an impact on the stocks as well. So the stock indices could also come under pressure. So with that, let's take a look at the USD JPY. After euro dollar, euro USD, USD JPY is the second biggest currency pair in terms of volume, and what we see is dollar being very strong against the US dollar, and it is approaching the 61.9% Fibonacci retracement. With this kind of strength, the move is likely to continue, and we have this channel trend line coming here, and it's possible it's gonna go and actually tackle that. And this is where we also have the 78.6% Fibonacci retracement. So we have a confluence of two things coming together, something we always like to pay attention to. And the cable, just quickly take a look at the cable. Cable was also down. You can see that it's just back into the lower end of its range, trading range. Okay, with that, let's take a look at the gold. So this is the daily chart of gold, and it is the futures chart. So this is the COMEX gold daily chart. So the previous video which I did over the weekend, in the weekend review, we were looking at this triangle formation. So just to go a little bit behind, what we see is the gold found a great deal of resistance coming from the 1.27 to expansion of this swing. Let me actually try drawing this for you to make it easy to see. Here we go. So this is the 1.272, and it found great deal of resistance, and ever since just been moving lower. It made an attempt to rally, found resistance from 61.8% Fibonacci retracement, moved lower, found some support from 61.8% retracement of this low to this high, rally to exact 61.8% Fibonacci retracement. So what you can see is that it is a pattern of lower highs but again, the key supports are on the daily chart are also not being broken as of yet. But this downward trend line is for sure providing a lot of supply here. So what is likely to happen? There's a chance we could actually go and test the 1988 level, and over there we'll also have this one-to-one price projection ABCD completed. It is also going to be the retest of this breakout point where it broke out really strong day on 13th of December last year, 2023. And here quite a number of things coming together, and if that fails to hold, then what it could mean is that we have this bigger one-to-one ABCD one-to-one price projection, which will take us down to this 1935 level right here, which is a really important support. And if this pivot point is broken down, then we might have CIT in play, change in trend. So we need to be watching gold really carefully, especially this triangle formation and how the market is likely to move over the course of this week. And now let's take a look at natural gas. Here we go. This is the daily chart on natural gas, and a look at that the volatility the past week and also today. In the weekend review, we did talk about this candle here, which is right at the 78.6% Fibonacci retracement. We have already seen price trying to tackle this area. It found resistance, and last Friday it actually closed right at the 78.6% Fibonacci retracement. And when the market opened Sunday night and Monday morning, we already saw there was weakness because it opened with a gap lower, which was and a fairly big gap to the downside, so which indicated there was selling pressure coming in the market. And during intraday there was a fair amount of volatility as well, by 15% to the downside. Wow, that's quite a lot of volatility in this market. Okay, so let's go and have a look at the key US stock indices that we like to follow. So this is the daily chart of the Dow Jones E-mini futures. This is the one which we have been following for quite some time. And here I want to talk about this one first before taking a look at the S&P 500 cash index and the futures. Because one thing we have been pointing out is this ABCD price pattern, which has actually completed around here. We also have the 1.618 expansion of this swing. So we have a confluence of two things, and we have seen price just go nowhere but in a trading range. And over the course of last couple of trading days, so that being today and last Friday, we have seen pressure come in this market, and this market is closing lower. However, it hasn't closed below this 37,396, which is this swing low here. So it hasn't really triggered any possible change in trend or swing being broken to the downside as of yet, but this could change, so we are paying close attention to this market. And if that were to happen, this market could actually be weaker than some of the other markets, with the exception of the Russell 2000, the small caps. So this one is really key level 37,396 for this market to hold. If it does, it might just keep on bouncing in a range. If it breaks down, then we could have potentially this open gap here. Probably this is because of the contracts actually. So contract switchovers is not really a real gap, but we could see perhaps move lower to 38.2% retracement to this little structural support, and the support coming here. We'll have to assess that, but this is something which we need to keep an eye on. Now let's take a look at the S&P 500 cash market. So this is the cash market here. One notable thing is that this market has still, it's on the cash basis, not able to take out the highs from the 4th of January 2022. So it hasn't really made a new all-time high, and that is something to be noted. We do have this ABCD price projection here around 49.10. There are some higher levels as well, but this is what we are looking at on the daily chart. and there's a good chance that actually market might actually make an attempt to complete this pattern, and after that we'll have to wait and see. Maybe this is what the markets are waiting for before. So this is the pattern we are watching. Now let's take a look at the ESE mini futures. So here we go. Here you can see it did make a new all-time high. So in the cash it didn't do that, but in the futures we did. Again, a sideways market today, but quite a fair amount of selling pressure that came in today on intraday basis in this market as well. So over the course of past few trading days, we can see starting last Thursday, 11th of January 2024, a fair amount of volatility coming in these markets, which is quite visible on an intraday basis. Now let's take a look at the NQ. So this is the daily chart of the Nasdaq 100 E-mini futures, and here what we can see is again the market is in a trading range, fair amount of volatility intraday, but on the closing basis it's a doji candle, which essentially means indecision. We were looking for this 17,250 level. We might still get there, but the market needs to break out of this range, and it's just really consolidating right here at the 78.6% Fibonacci retracement on the daily chart. But this market was better in terms of trading today because it closed slightly into the positive, but still positive. Now let's take a look at the Russell 2000, the small caps. So this is the daily chart of the Russell 2000 small caps. Okay, it's not drawing my... Okay, so what we can see is that this market is much weaker. We already know that because we actually follow this market in terms of the percentage moves. But also technically why we are seeing quite a strong reaction or movement in this market, because it keeps on rejecting this 38.2% Fibonacci retracement. Here it just closed slightly above that. Next trading day, big down day. Then another attempt, rejected higher price, and this is a micro double top here. And what happens is that in strong trending markets, 38.2% Fibonacci could be a really strong support or resistance depending upon the direction of the market, of course. So here it has proven to be a fair amount of resistance, and this market actually took out the lows coming in from the 5th of January. And now the key level that we are watching is right here, the 38.2% Fibonacci retracement coming in around 1920. The market is likely to get to this level, and then we'll have to watch whether this level is going to provide some support or not. I don't have a pattern formation as of yet. There is a little bit of let's take a look at this expansion here, because ideally we like to see a confluence levels come in. So there we go. Here we go. What we also have around 1920 is the 1.272 Fibonacci expansion of this swing. Let me actually try to draw this swing for you. It is a valid swing in my opinion, because there's a fair amount of points in this little swing. It might just look like a little swing because the market has been trading in a fair amount of range here, and we see 1.272 expansion of this, and 38.2% retracement coming in around 1920. So key level of support, and we'll have to wait and see how the market is going to respect this level. So thank you very much for watching the video, and wherever you are, take care of yourself, and I wish you good luck and a good trading, and speak soon.